What's up, YouTube? It's your boy Steve from Printer Gang Investments. We back with another market reaction. You know, Q2's underway. AI is still in play. So we got a few analysts giving their opinions on what they think is going to happen in Q2 with the AI spin, things like that. So here we go. Feel me, if they'll play it.
Back in October, our next guest called this the beginning of a new bull market. So here to share where he sees this market heading now is Alger CEO and CIO Dan Chunks. Good to see you. Thanks for coming by.
Thank you.
So S&P's up 21% since you made that call. I know you're probably feeling pretty good about yourself. This is a what have you done for me lately business, though. Where are we going from here?
Well, I think there's still a lot of room to run and a lot of time to run. First quarter earnings about to come up. I think it was really interesting that we had good news in the economy in the jobs report. And unlike a couple days ago, when people feared that might mean that, Fed easing was off the table, the markets rallied quite strongly. I think it's a sign, actually, interestingly, that, there's a strong fundamental underlying support for the market because the Fed is going to cut, coming years. And the economy is, moving along well. And so that's a very positive combination for corporate earnings, and the market will follow that.
Let's pause that real quick. You hear what my guy's saying? The Fed is gonna cut this year, next year. The Fed's gonna cut at some point, and the economy's strong in the meantime. So the way I see it is, normally in a high rate environment, our stocks might not be doing as great. But seeing as how due to AI, we're going up even with the high rate environment. Once they cut, probably going up even more. But we'll continue.
Not as beholden to interest rates as cuts as maybe we thought we were. Are we come around to the idea that stronger economy trumps rate cuts and we can deal with it for a while?
Well, we've been in the camp that fundamentals trump everything. And rates, of course, can affect fundamentals. But at the position that we're in now, which was the bias is clearly to cutting, even if we're on hold for longer than perhaps the market thought, the bias is towards downward over the next couple of years. And so that's the positive support for the equities.
Okay, so it's as long as you know that the hiking trend and the new trend from the Fed is starting, that's good enough.
Yes.
You were bullish large cap tech like Nvidia, Amazon, Microsoft. So those stocks since your call in October have come a long way.
Yeah, like 70% for Nvidia or more, I think.
Do you still like them, or they come too far too fast?
So the good thing about Nvidia and some of them is that their earnings and revenue growth is almost keeping up pace with the stocks. So they haven't gotten extreme in valuation yet. And but it's the opportune time now to also think about what will be the next beneficiaries of AI, and as well as a strong economy.
Yes, sir. So before we continue that, you hear what they're saying. It's time to start pivoting, people. Nvidia done ran, AMD done ran. I mean, we still got money on the chip side. Look at Dell and Micron, you know what I'm saying? I ain't have time to get the bigger position I want. But like they saying, it's time to start looking to, all right, where's the next wave of AI money going? The software stocks, the regular companies whose revenue growth is going to improve, whose cost is going to go down. But we'll continue.
What stands out to you? If a lot of money's been made, the easy money, I should say, has been made in these names for the time being, where can I make the easy money now?
Well, there's never any easy money. But I think actually AI is powerful enough that it's going to drive investment and therefore growth across multiple sectors. But I'll give an example. In traditional media, TV, movies, there's a large percentage of costs that's in the production and post-production. We see Netflix, for example, as an interesting AI beneficiary that people don't think about, but it's on the cost structure. They spend $18–19 billion a year in producing their content. A lot of that production cost could be significantly reduced by AI.
Do you believe in the broadening?
I actually like that idea. I'm in Netflix stock, not a huge position, and I don't even got the calls yet, but it has been doing good for me. And I like what he's saying. I mean, that's a tech company too, but that's what we're going to be looking for. Companies that aren't necessarily the first companies that come to your mind when you think of AI, but AI could improve their business. Think about it. Netflix shoots movies. What's Sora AI gonna do? Help them do video scenes, save them costs. You feel me? I'm pretty sure the regular chat GPT could probably help them choose what their customers like and don't like even better. What's they gonna do? Help them save money, improve their costs. So we're looking for more companies, not just tech companies. Like, it might be a restaurant, it might be a healthcare provider. We're looking for companies where AI is gonna help them increase their revenue, cut their costs so they can get money. Let's finish this video off.
Story.
The broadening
of the market story.
Yeah, absolutely. I mean, my partner Uncle Crawford here was earlier. I guess now we're talking about the Fab Four instead of the Magnificent Seven.
Right.
I have a little bit of doubt. I think the three that are getting dropped are still very good companies, but they're going through some transitions, and that's Tesla, Google, and Apple. I think they will be very strong players and benefit from AI, maybe in a little bit second stage, although whenever Tesla finally gets automated driving really nailed down, that's going to be a singular moment.
Fly for Elon.
Yes, we see a broadening of the market into other sectors. And for example, electricity demand is up a lot because the computing intensity of AI-driven servers demands a lot of energy.
Ooh, I like that.
Utilities, of course, have been far out of favor. We're not typically seen as utility investors, but we see some interesting opportunities in utilities just because of the electrical demand.
Interesting. I appreciate your time. Thanks for coming by.
I like that. Electrical demand for AI. I was looking at the build out, the data centers, like the fixed comfort systems, modern type of thing, but that's another way. The electricity play. I like it. And I like what he was saying about that Magnificent Seven. I invest in those stocks, but I don't like to really talk a whole lot about the Magnificent Seven unless like something particular is going on with them, because I feel like I don't want to be distracted just buying the same stocks. I treat those stocks dang near like a shoebox. Like, you make money from doing other things in the stock market and you use the money to buy those. So yeah, like they say, the broadening's on the way. That's looking good. You know what I'm saying? So it's not just gonna be mega cap tech and Nvidia, them boys. For our Palantir shareholders, we right there in that mid cap range, I believe. So that should help us a little bit. We a little tied up in the AI hype, but we're also should be part of the broadening at the same time. So we gonna see. But that was just a quick little reaction video talking about these markets. Y'all have a good weekend. I'm gonna probably do some more videos for you guys. We're gonna keep talking, keep trying to strategize and get this money. It's your boy Steve from Printer Gang Investments. I'm out.